this picture here was me in 2007. I started off as a concrete contractor in Florida. And if any of you know what happened the following year and the year after that, it was tough. There was dark pools, alligators in the pools. They had large snakes in the pools down there in South Florida. So I had to reinvent myself. And I saw that there was opportunity. New York City was thriving, especially the options market. Generally, when the stock market overall is having a tough time, people put on options positions as a hedge. So I met a couple guys that were doing really well. I decided to pack up what little money I had, go to New York, and camp out and meet people. I met a guy that was a broker on the New York Stock Exchange. You can flip it to the next one. That's on there. And basically, I had no experience in this industry. I never traded anything. All I did was build. I poured concrete. I did form work. But I had hard work in my background. And I knew that quality of service was important. And what I sold the guy was on this. I said, listen, if I can put my head down, I can come in, I can do math, I can work hard, and I can deliver a quality service, I can do this for you. Just let me in. So he gave me a job writing paper tickets on the floor. So basically I stood in the back, did little autographs, made sure that trades cleared. You can actually ride to the next one. This is my first attempt at a selfie, right here, as you can tell. So that's the badge. You get a badge number. So what happened is, just a few months after being there, I saw that there was opportunity. People were stressed out about the job. It was really demanding, and some positions opened up in the crowd. So I elected myself, and I said, I'll go out there, I'll stand in the pit, and I'll do trades. So that was fun. So for 13 months, I got to go there. You have a headset, you do hand signals, you trade back and forth. It gets pretty aggressive. And this was on the options side, not the stock side. So it ended up working out. So I went from life one, being a contractor, to not knowing anything about options or stocks or trading, to 13 months later being on the floor trading options in the pit of the New York Stock Exchange. You can go to the next slide, thanks. So that was it, life two. And there I learned salesmanship and honor. So salesmanship's important. When you go into the workforce, you're going to have to sell yourself to your first employer. That's it right there. They're going to believe in you. They're going to look at your resume. They're going to see all the credentials on there, but they're going to want to know who you are. And then whatever role you take on beyond that, when you go to climb the ladder, the corporate ladder, or start your own business, salesmanship is a massive part of that. I highly advise taking classes, reading up, learning as much as you can about salesmanship. Make a connection with people. And honor. Do what you say. You might not be the most experienced at what you do when you get into a new field, but do what you say. And you'll learn a way to figure it out, and people will see that you work hard, and you do what you say, and you come through, and they can rely on you. Thank you. And this is me now. This is Digital Asset Investment Management. It's a local firm. We're properly registered as an investment advisor to advise on digital assets, which most people call crypto, and manage those as well. There's some unique features to it, but go ahead and go to the next slide. What I'm really here to do is leave you with something interesting. So in this life, it took risk. So for the last 8 years, I was in New York. I worked at various broker-dealers, wirehouses as a trader. In fact, my broker check will probably say that I was at 7 different firms, 2 of them by choice, the rest between mergers and closures. But I decided when my last firm got purchased that I was going to take the risk. I was going to add risk. Instead of having a comfortable job that paid well in New York City, the family had a good place to live, my son was doing well, to take full risk and start my own business. So we relocated from New York City and we came to lovely Orange County here. It wasn't that hard of a choice to pick this place. And I looked at the industry, I saw where there was a void, and we went at it. So I took the risk, and then you got to be determined. And how I mean by determined is when we were going through the process of registering this company, the regulators hadn't seen something like this before. Most businesses in this area operate as a money transmitter. There's more coming down with a BIT license, and some, like Coinbase, has become a broker-dealer through acquisition. So we had to educate a bit, teach them how it works, align the processes, come through with partners. And months afterwards, we got right down to the end, and we had 1 step left to go, and we got put on hold. And it looked like we were going to be moving to Wyoming after just being here for a few months. So my family wasn't too happy about that one. Sorry if anybody's from Wyoming. But so I ended up just pushing and selling and talking to the regulators and telling them why and how and what I can do and the qualifications and how people need qualified licensed help in this space. And eventually we worked it out and they approved. And here we are now and with the business and operating. Can you go to the next slide, please? Let's see how I'm doing. Okay, we got time, good. Okay, so this is like the last slide, and it just says very basic things. If you find yourself in a hole, down and out, in between jobs, or trying to transfer from one career to something related to blockchain, you can help yourself a lot by learning. And it'll build confidence in yourself, and it'll help you sell your services to people just by learning. Don't feel down and out. Get in there, read books, network, learn what you can. You'll get out of it. And this is the one that I really rely on a lot. And this is something that I think about every morning, and it's really important. You gotta know the difference between results and responses. Now, responses feel good. You're in your text messaging, and you're talking to people, and you're asking them a question, and you're sharing your photos, and it feels good. But when you come into business and you want to succeed, and you're gonna enter the blockchain or some form of business related to it, you gotta go for results. You gotta get the results out of the responses. And that's a big difference. And it can be hard to get, but you gotta know what you want to do in life and seek the results from the responses. And that's it. Quick. And there's a little brief about my firm. In fact, there's actually, she put on my website before, and there's no email on here. Part of the salesmanship is I like to make a connection with people. I don't do business cards. I like to meet you, know you, exchange information properly, tell a little bit of a story. That way when we talk again, we have something to relate on and go forward. And that's it. Yeah, I think you guys can go to lunch here unless anybody has a question or anything quick. You're welcome. Thank you.
Hi there. So
hi.
I'm just really interested in all this stuff because I worked for like a crypto VC, quote unquote.
Okay.
As like an ICO researcher, and I was kind of curious to know about you. Like when you guys look to like invest in like ICOs or something like that, what do you guys look for?
Okay. So the license that I have is kind of complex. It falls under a registered investment advisor under a CRD number. And we also have the capabilities of advising on traditional securities, but we moderately focus on digital assets. We call them digital assets because we want to stay away from like the crypto negative connotation, the stuff associated with the Silk Road back in the day, and then ICOs that come out saying that they're going to deliver something and they never do. When it comes to ICOs, we generally stay away from them at the beginning because right now the way that regulations are going down, they're pretty much going to be looked at as a security. So this whole landscape has changed really dramatically from the start of 2017, where like ICOs were just taking away the market share from like, the big guy Bitcoin, to now it coming back where ICOs contracted. It's gotten quite expensive to do an ICO properly. So right now we stand off from advising on ICOs or looking to put investors in ICOs at this time.
Any other questions?
Yeah.
Hi. Who holds the private keys?
So that's all our custodianship. Like that whole thing that you were talking about with escrow and the custodians, that's where it is. It's with the custodian. And there's players out there that are upping their game. They're becoming insured. They're becoming bonded.
So you guys hold it?
No, we do not hold the keys. No, we actually, the way that the firm operates, we don't have custody with it. We have the ability to, but it's better to sub it out to a vendor and let them hold custody. That's what they do. They do it day in and day out. They got the programmers doing it. They got 10,000 accounts, billions of dollars in management. That's their job. They're professionals at it. They're regulated. They're licensed. They're bonded. It's their job to do it. Yeah, that'd be a big task for me to take on and incorporate. Maybe we'll get there. There's some ways to streamline this business and to make the investment and trading of it from an advisory standpoint very smooth and reduce the cost to investors, but it's coming. It's about 2 years down the road. Go ahead.
You use the term digital asset.
That's right.
Could you describe that? I'm thinking of a data center, which is a real estate company. That's a digital asset in some people's minds.
Yeah,
and others
correct.
not. What do you mean by digital asset?
That's a great question. So going back to what I was telling him is in the definition of like, cryptocurrencies, you got that. And then you have the IRS that looks at it as virtual currencies. So you have a lot of terms that are going out there. No one's put a firm stamp on anything, what's going on. The SEC has appointed a woman named Valerie, her last name is harder to pronounce than mine, as the digital asset advisor and blockchain innovation. So they use the term digital assets. There's more and more people coming along Last week, over at Allianz, Mohammed El Iran came out and called it digital assets. So going back to it, it's separating the coins and tokens that are just launched out there through an ICO process that might not ever show a deliverable. And they're just raising money, they're doing it improperly. So sticking to digital assets, which could be a store of value first, and then the utility of them, whether it be a form of payment or a form of wrapper perhaps coming up in the next few years. So starting off with store of value, digital asset, alternative asset. Hopefully that answered it a little bit better. We can talk about it some more. Okay?
I have one question over here.
Sure.
Hi, does your firm examine white papers of ICO/coins that are coming out to the market?
On a very, I'd say very quickly, it's pretty easy for the fundamental analysis that we have in place to kind of weed them out, like right on the top level and get through. It basically just starts with already doing it through some kind of register already, and then you just start to see them fall out. So, and like I said before, right now, as of this moment, we are not advising on any of these. Most of them are considered securities offerings, so they got to be built properly through some kind of registered offering, Regulate Plus. That can be quite expensive. The price of that we've heard is rising, so people are starting to stay away. So we're seeing ICOs being reduced in the marketplace. Yeah, you're welcome. All right, I think it's time to go to lunch.
Two questions.
Oh, okay.
From
Okay, sure.
So the first question.
Over here. To answer them?
Yeah.
Okay.
So the first one that we have for you is from Eddie Whitney online. He says, are there any retirement vehicles that hold crypto?
There is, yeah, and that's part of what we specialize in. So in the world of this retirement vehicles and what goes on, just roughly within the last year, it was mostly through self-directed IRAs, and now we have the possibility to put, synthetically put Bitcoin in a Roth IRA. That answers the question.
And then the second question.
I do gotta, because I am licensed, I do have to qualify something. This is not investment advice. We have to put that out of there. I do not advise going and doing any of those. You really gotta know your risk tolerance. You should know what your portfolio looks like, what kind of future expenses you get. There's all kinds of stuff in investment planning that you should really look at before you invest. And be careful investing in just random exchanges. I think the last count I heard, there was almost 13,000 different exchanges in the world. That's a lot. So when there's a hack per se, it's not necessarily on Bitcoin, it's more on the services relying on storing your Bitcoin.
And then our second question is from Mary Bailey online as well. Could you share your thoughts on criteria used to determine which country to choose for an ICO?
Oh, that's interesting. Well, I'd love to have an answer on which country to choose for an ICO, but we're licensed in the United States, and we're kind of geo-fenced. My company stays in here. We operate everything that goes on here. And the parties that are in our system, the vendors, the way we move, the way we trade, is all through licensed US-based companies. So if there was something to go on outside the US, we wouldn't be a part of it at this point.
I have one question.
Sure.
I'm allowed not to speak. So for people that are looking to do a startup, a blockchain startup,
Right.
or an app, and look at financial kind of models,
Okay.
what's the difference between an ICO and a VC kind of investment?
Okay. So.
Because people don't know about that.
Right.
We talked about that on
We
Friday.
did, yeah, we did. So I'll try to be brief, and it's going to be a simple explanation, and there's going to be a lot of different ways that this path could go, and there's probably some guys in here that could really get deep and explain this, but we'll try to be on the basic level. So if you have a startup of any sorts, in the past, you could go to just an investor group or VC fund and do it, and then came along the ICO route, where you could create your tokenized security, release it out, and raise money. But what I look at in doing these is that it might not be the right thing to do an ICO. You got to look at what your company needs. So on one path, when you do a VC backed, you raise money and you block yourself in with that party that's giving you the money. And they might be a little bit more of an expert in the field or have connections that help you sell your product. When you go over the ICO side, people generally think that they can raise more money. And sometimes that happens because the marketability of ICOs right now is really high, but you don't have the help. You don't know who the investor is per se. Now there's find ways around that to figure out and lockups. But then what you end up seeing is that the shares get released out into the public and trade on these decentralized exchanges. And if your company has any kind of little slip up, well, the share price of your coin synthetically could get dropped really quickly. So you could run through cash flow issues out the gate. So I think when you look at starting a business and which way you're going to raise funding, really understand not how much money you need, but who you need to be with you to help you grow. And that will help you go down the path. If you have all the experts in your bag and you just need it for marketing, the ICO route might be for you. But if you need a hand and you need to get your product out there, it might be through the traditional rounds of VC. Yeah.
Yeah.
One last question.
Sure.
I see on that particular response very much. Just a quick question. In what segment within crypto, thousands and however many there are right now, is there a particular segment that you guys look at from your portfolio perspective? Whether it's supply chain traceability, currency, privacy coins, utility tokens, whether it's the segment? Yeah,
it's a great question. So I think there might be roughly like 1,700 tokens out there that trade on predominantly the larger number of exchanges. They could be classified as anything from a commodity, a security, or a currency, to go through it. When we look at these things right now, it might lead more back to the commodity-based store of value to see what's going on. We watch for inflationary stuff that comes in, if they can create synthetically tokens or they do a drip. And then it gets deeper into that of like what the utility might be that comes along the line down the road, which then could be construed as a security. So right now we stick with store of value, watching the inflationary parts of it, where it trades and how it trades. There's some other stuff that gets deeper besides the fundamental side of it. There's some stuff that you can't put a large position on in, pardon me, to do. So you got to watch the liquidity of these things. Yeah, big factor. All right, lunchtime?
Any last questions before we launch?
Oh, you got one.
Yeah.
Are you targeting more retail investors or do you have any institutional investors?
So our base is kind of wide. It could be, institutions generally have ways to get into the market. We see it through funds, through other kinds of vehicles, but mostly for us, it's retail investors and then through like small businesses in the local network. Yeah, correct. You're welcome. All right, send them to lunch. All right, lunchtime. Thank you.